It's Thursday, or Wednesday rather, August 19th, 2020. And the tech story of the day that we want to focus on is this one that was just published on the Reuters website. NVIDIA beats estimates, but data center results leave shares flat. The writers are Stephen Nellis and Neha Malara. The points that we want to make here are as follows. Number one, if a business buys another business and as a result of that acquisition does much better than analysts think it should do, and the business happens to be a publicly traded company, it shouldn't be a big deal. Nevertheless, the writers here, and probably several other Wall Street analysts, are going to look at NVIDIA's results, and they're going to note that Mellanox, the Israeli data center chip manufacturing company that NVIDIA acquired, accounts for at least 30% of the data center sales reported in this quarterly return. Once again, we don't think that's a big deal. And in fact, in comparison to Amazon, with its Whole Foods acquisition, or Microsoft with its LinkedIn acquisition, not only don't we hear of any abrasion internal to NVIDIA as a result of acquiring Mellanox, but they're cash positive and they're actually beating analyst estimates of data center sales as a result of this acquisition. Great for them. They're doing a great job at it, whereas Microsoft LinkedIn arguably could even be a loss leader, and Whole Foods historically has been the basis of indigestion at Amazon. The acquisition has never delivered, in our estimation, as it ought to have done. Leaving that aside for a moment, let's take a deeper dive into this point here, which is, but results sent shares down 1.5% in trading after the bell, before the market closed on Wednesday, etc., etc. And then it said that the company's data center segment reported this beat, 1.75 billion versus 1.71, and here is the acknowledgement of Mellanox as being the revenue generator responsible for 30% of the data center segment. And then down here is a comment from Stacy Rasgon, an analyst with Bernstein, who said that the figure implied that NVIDIA's core data center chips grew only about 6% on a quarterly basis, which may have been lower than some investors with sky-high expectations had hoped. Let's think about that for a moment. What are NVIDIA's chips that are sold to data centers? Well, we have a choice. We have graphics processing units sold for heavy-duty graphics requirements, gaming, etc. We have graphics processing units sold for serial parallel computing requirements. Think Hadoop. Think other applications where servers are chained together to repeat the same tasks individually to contribute to the performance of a program. That is the bigger piece of the application of NVIDIA chips into the data center. Why might those sales be down? Because many of the customers for these chips, think Amazon AWS, Microsoft Azure, Google Cloud, Facebook, Snap, Twitter, have actually homegrown their own chips. In the case of Google, they have the TensorFlow chip. So because of the price that NVIDIA has been priced out of that market because that market has become a commodity. The piece of that market that still has a lot of vitality to it and has a tremendous amount of potential for NVIDIA is still off in the future. What is that piece? That piece is artificial intelligence. where the same parallel software, deep learning algorithms, uh, uh, neural networks, modern day neural networks that are looking for patterns can search massive quantities of data with these cores, these CPU cores, chained together to do the search in serial, in parallel processing again. Um, and the secret sauce that NVIDIA adds to it is a lot of work that they've already done in the artificial intelligence space. Their high performance computing solution built on their chips. The market is not yet ready for those chips. And what market are we talking about? We're talking about enterprise computing, where for one reason or another, enterprise computing has still not even bitten deeply into the potential of using RPA, robotics process automation, on a massive scale. So there are a bunch of things going on in that enterprise computing space with regards to AI that we don't have enough time here in this video to jump into those. But investors should think carefully about why it is actually really good news that Mellanox is contributing to NVIDIA's win in the data center, and why the typical application for GPUs is now serviced by commodities before trashing NVIDIA, because NVIDIA is a leader. And as it's stated here, NVIDIA's gaming business posted revenue of $1.65 billion, beating FactSet's estimates of $1.41 billion. But because NVIDIA is an example of tech companies that have magnetized too much investor dollars, the price of the stock is now, to use what has become a familiar phrase on Wall Street, priced to perfection. And because of observations like this one from Stacy Rasgon, the stock is doing poorly after hours. It's down 1.45%. So how do we extrapolate from what's going on here with NVIDIA's stock to early stage tech businesses? The way we would do that is to urge and encourage entrepreneurs with early stage tech businesses to make every effort to either secure funding from investors with the know-how and the knowledge and understanding of what the market is for the technology as possible. This kind of response from Stacy Rasgon is indicative of investors who they want to see return. They don't care how it happens or why it happens, unless there's a bit of a miss or somebody does a calculation like Stacy Rasgon has done here. They're not particularly technology savvy, though Stacy Rasgon obviously is, and most Wall Street analysts are. So if you want to magnetize investor dollars, and you don't want to have you want to minimize the misery of the aftermath of that, then you should pick investors who understand the technology that you're working with. We can help you with that. We do management consulting work with CEOs or C-level management at early stage software businesses focused on enterprise markets. The name of the company is IMB Enterprises Incorporated. My name is Ira Michael Blonder. I'm the president, the CEO and founder. And I have a Twitter page. I invite you to take a look at that. Mike the Bebop. Talk to you tomorrow. Bye.